Hi everyone, my name is Avishai, and before we start researching STOR Capital, all I ask is you hit that like button and subscribe to the channel as it helps the channel a lot. Let's begin. So I'm right now on the presentation of STOR Capital for the Q1 investor presentation, and we're going to use this as a starting point to go over what's happening with STOR Capital lately, and we're going to try to get a hint of what possibly happened in the second quarter so we know how to invest accordingly. So STOR Capital, a class of our own. That's how they call themselves. And I'm just going to jump here right away to the snapshot. And in the snapshot, you can see STOR has a 30-year successful leadership track record. That's basically their management team that kind of wrote the book on triple net lease REITs. And the currently market cap of the company is trading around between $8 and $10 billion, over 2,600 properties, and over 520 different tenants. Sector-leading diversity in tenant, industry, and geography. So those are all interesting things to take into account. They call themselves a class of their own. They have a couple of things that, as a REIT, put them in a position where they have a moat. And that is the kind of moat that somebody like Warren Buffett really likes. And that's why Warren Buffett is an investor in the company. So Berkshire Hathaway owns, give or take, around 9 to 10% of STOR Capital. So that's just a fun fact. And let's see, what else do we have here? So nearly 200,000 companies in STOR's target market, with 26,000 contacts in property prospecting database. So basically, right off the bat, we know that STOR Capital has a lot of clients, potential clients to be more exact. And let's see what else. So there's opportunity to be selective, and that basically gives them the option to only pursue better assets. Now, moving on here. So let's see what we have here. 73% of STOR Capital's customers have revenue over 50 million. Weighted average tenant revenues, 815 million. Tenant revenue growth of 12% since 2019, or in 2019. The tenants employ over 2.5 million workers, operate in 36,000 locations in 50 states. Those are the names of the metrics they're kind of using. Operate, employ. They're trying to basically emphasize here that their clients are big, they're strong, and they have a lot of basically financial strength. That way, you can be confident that the people renting from STOR Capital's properties are strong clients. Moving on here, STOR delivers a leading net lease business model. So let's see, what else do we have? Okay, STOR stands apart with a fortress balance sheet. Okay, here's where it gets really interesting. Let's read this quote from the CFO, Catherine Long. We have always believed in the power of the right side of our balance sheet to lower our cost of capital and manage interest rate and investment risk. Uniquely, having two means of investment grade term borrowing is key to our balance sheet leadership. So you can see, basically the company has a cash flow that in 2019 was actually doing really well pre-pandemic, and you can see how they kind of managed to pass the year of 2020 with some scars, but not as much as you would think in terms of the cash flow. So just a tad behind what they had in 2018 in free cash flow. And you can see that their debt that is coming ahead pretty healthy, and there's not a lot of debt coming in the next 2 to 3 years. You can see that basically between 2021 and 2023, there is just kind of a healthy amount of debt that has to be paid back. So moving on, creating superior contracts. So one of the things that STOR Capital does is that they create these contracts that give STOR Capital a high score when they want to take these contracts and try to get loans and leverage. So what they do is that they managed to create a high level of rating with tenants' contracts. True that the contracts are pretty much protecting them from any kinds of downfalls. Let's give you an example. all the contracts have a lot of protection against inflation. So when they take those contracts to a rating agency, the rating agency sees this and will probably give a higher score. What else do we have here? They're talking about marginal equity return and how theirs is higher than their competitors. So you see here National Retail Properties, Agree Realty, Realty Income, basically positioning themselves next to each and one of them. And what else do we have here? Talking about their dividends. Let's see. No, not the dividends yet. My bad. So basically the growth from reinvested property sale proceeds. Okay. We'll get to the dividends later with the yield the company is generating, which is a good yield, and currently at the date of making this video, just around 4% to the stock price, but they're increasing their dividend yearly, and we're going to get to that soon. And here's the portfolio, which is pretty interesting. So you can see that they're in 49 states. Occupancy has been in 2021 until now 99.6%, which is great. Properties not operating but subject to lease, 2%. In contracts rated investment grade. So they never went under 70% in the last 3 years when it comes to that. Restaurants, full service, limited service, early childhood education, health clubs, automotive repair and maintenance, movie theaters, pet care, behavioral health. So you can see that none of these is really over 10% of their income. And you can really see that there's a dispersion between all the different businesses, and you have medical and dental, and you have lumber and construction material, and you have, what else do we have here? Logistics, wholesale automobile auction, equipment sales and leasing, metal and mineral merchant wholesalers. So just a bunch of different industries that are renting properties from STOR Capital. And let's see, what else do we have here? So diversification across industry groups continues. Food processing, hunting and fishing, used car dealerships. So a lot of businesses that are probably doing well right now. Now, one of the things that I want to emphasize is that STOR Capital buys properties from people who own also the building. So they're basically unlocking capital for businesses that capital is locked inside that building that they're buying, and they're giving back the location with a long-term lease to the seller of that real estate. Top 10 customers represent 18% of base rent and interest. And you can see top 10 customers, very, very interesting business model they have. So a bit about the investment pipeline activity. You can see how the numbers of the new deals added and the deals closed in Q1 2021, and how the starting pipeline and the ending pipeline look like. And the pipeline sector distribution, a lot of focus on manufacturing, specialty med, less focus on restaurants. So you can see how many leases are expiring in the next 5 years, and STOR Capital prides itself with having a minimum amount of leases expiring in the next 5 years in compared to all its competitors. Now, this can be a good thing or a bad thing, depends on all kinds of changes that happen. But in general, when you own a REIT stock, you want to know that most of the tenants are locked in for a long time. That creates stability. Moving on, they're talking about being most diversified. And now moving on to talk about their growth and performance. So how they've been performing in compare to the S&P 500. So it really depends on the year. So you can see in 2015, it really performed well. 2016 was kind of in line. 2017, it was in the middle even. 2018, you can see how they performed better than the S&P. 2019, once again. And 2020, a year that was not good for most, if not all, the REITs. So the shareholder return over 6 years is in line with what you would see from the S&P 500. So let's continue moving on. STOR seeks to deliver stable, predictable investment-grade stockholder performance and superior market value added. So the company is really working towards giving the stockholders a lot of focus. So they're working on building a model that always puts the stockholders in the first place. They care about the people who own the stock, who invested in the company. Like I said, Buffett is between them. Vanguard owns a lot, I think. Also, you have other investment firms that own a big chunk of this company. A lot of companies like to use this as a pension plan stock just because of the high dividend yield. It keeps on growing, and it's also a growth stock in a sense just because they're so aggressive with buying properties and using leverage to continue to grow the business. Corporate responsibility in the forefront. I'm just going to move on. The strong protected dividend growth. They're talking about the dividend growth throughout the years. Like I said, we would get to this point. And the payout ratio, which if you watched one of my videos about payout ratios, you know that a good payout ratio is not one that's near 100%. The further it is from 100% to the lower end, anywhere around 60, 70, 80%, that is a good dividend payout ratio to be in. And right now you can see the STOR is right around the 75 to 85% area. STOR is a leader in profitable asset sales activity. What else do we have here? Okay, so here are the numbers, rental revenue numbers, quarter to quarter. You can see that their Q1 of 2021 was more revenue than Q1 2020. And let's see, property costs gone down significantly, but general and administrative have gone up. Overall, you see that they netted income less than what they netted last year, but the dividend declared per common share was higher. So whoever owned the stock did get a bit more on the dividend side. And while the company's net income wasn't highest, I think it's safe to say that the company is probably going to outperform into the reopening. So reopening of the economy will probably be a huge tailwind for the company. Let's see what else do we have here. Consolidated balance sheet. So basically the numbers, total liabilities and stockholders' equity from quarter to quarter. And moving on, you can see quarter-to-quarter comparisons. And if you're looking at the funds from operation, adjusted funds from operation was higher, and there was a small amount of growth. So when you have a REIT, it's easy to make one quarter look very different from another quarter from the past year just based on how many assets are sold, if there was any kind of money generated to the company through selling of equity. REITs are a very different species of stock in terms of how they operate and the moves they make in compared to other companies that actually have a service or sell a product. Remember, these are asset management companies. So I think that we're reaching the last parts of the presentation. I'm going to jump into the price of the stock and what it's been doing. So really quickly here, I'm going to jump into the browser, into STOR, capital, stock on Yahoo. And let's take a look what's been happening with the stock lately. So last trading day, really good, 2% up. And if we're looking year to date, you can see that the stock has been on an uptrend since the beginning of the year. And if you look at the last year, we're just looking 1 year back, stock ripped higher like most REITs and has done well. Market cap just about to be 10 billion soon if it continues this uptrend. And it has done higher highs, which is usually a good sign. It needs to break out of the 36, 37 kind of range. And if it can do that, it will probably reach former highs. So if I'm going back to pre-pandemic, stock was trading around almost 41 at its peak. Let's look at what we have here in terms of who are the holders. So I spoke a bit about this, and you can see here Vanguard, BlackRock, Berkshire Hathaway, Principal Financial Group, Wellington Management, Morgan Stanley. So all of these own a very big percentage of the company. So you can see 88% of shares are held by the institution. So that says a lot about the company. In terms of the insider roster, there are a lot of insiders who hold a lot of STOR Capital stock. And if you look at the insider transactions, you can see that there were stock awards done lately in May. in February. And you can see here that there are just a lot of people who just sold stock. Most of the people here, you can see that long Catron buying here a lot of stock on August 1st, 100,000 shares. It's a huge, huge trade. Nope, sorry, my bad. It is $100,000, not 100,000 shares. So correcting myself. So for $25.23 a share, almost $100,000. Company is known for having a lot of its management buying their stock. Going into more historical data and statistics. So the company's forward PE right now is 36.25, which would be very expensive right now for, in general, the S&P 500, but do take into account that the company has a high dividend yield. So you can wait and receive money while the company grows into its figures. Price to book, pretty rich, but what you would expect from a company that's best in its class. Profit margins and operating margins are amazing for this company. And like I said, currently the dividend is around 4.01%. And next dividend date is July 14th. And if you missed the ex-dividend date, you should probably wait for the next one before you get in to know when the next dividend is coming out. I bought into June 28 ex-dividend date, and in general it's worthy to know this is my number one stock position. So it's not only that I'm long, I'm very long about STOR. I'm very bullish about STOR Capital. I'm very long the company, and I think that it's a great company and a great stock. And I'm researching this video, and I'm checking just with you together the latest article from the Monthly Fool, the 2 retail REITs to buy. And let's just jump to the article really quick and see what they're writing about. Just really quick, kind of going through this article. Yeah, nothing here stands out too crazy. But here's what they say about STOR Capital. With that in mind, I think STOR Capital's rent collection will normalize very quickly. For one thing, movie theaters and family entertainment centers are now reopened, and early indicators are quite strong. We recently heard of Bank of America CEO Ryan Wayne that consumer spending is 20% higher than it wasn't before the pandemic. So these are the kind of things that you would probably want to know, and good thing we went into this article. STOR Capital had AMC as one of their bigger clients, and AMC has basically raised a lot of cash and will be able to pay STOR Capital a lot of the rent that they owed them. So just kind of interesting tidbits that we're gathering along the way. And let's see if there are any other news-related things that are affecting. So last month, STOR Capital recast credit facility. Let's see what was happening here. Internally managed net REITs REIT. The recast $600 million secured revolving credit facility has been expanded. Okay, so when we're going to the pandemic, STOR Capital had a credit facility of $600 million. They drawed down that credit facility when the pandemic started just to have cash on hand, and they repaid back all the $600 million as soon as they could. And now they have a larger credit facility that is with a total maximum of $1.6 billion. So if another pandemic 2.0 happens and the company needs to have cash on hand, they have $1.6 billion they can withdraw from the credit facility they have. So these are facts you want to know about a company, that they have a strong financial position to be able to withdraw on a credit facility when needed. So that's an important thing to note. Now, kind of closing tablet here, just to kind of summarize a couple of things until now. So we know STOR Capital had a challenging 2020 like most REITs. It had a challenging time collecting rent, but now overall, when you're looking at the first quarter of 2021, those challenging times are probably behind them. The worst is behind. And into the reopening, there is an expectation to collect more rent and to be able to show growth just like pre-pandemic. Now, the stock price is trading not so far from former highs, but still stuck in a range. One of the things that is important to note, and we kind of forgot, is that STOR Capital has a unique strategy when picking their tenants. They pick tenants based on the tenant's ability to not be Amazon. So basically, a tenant that STOR Capital chooses is a tenant that their business is not easily replicated by Amazon. So when they choose a business that's not easily replicated by Amazon, usually their profit margins stay pretty stable, and the companies that are paying the rent don't disappear overnight just because of a technology disruption. Now, if we went over all the financials and we went over all the kind of tidbits around STOR Capital and who are the people holding and how is the management and the relation with the stock, all that's left is to ask ourselves, are we bullish about the REIT space? Are REITs going to continue to generate income, especially if there is an inflation just ahead of us? So if there is an inflationary environment, REITs should do fine just because the assets they own should rise in value, and usually that is what happens when inflation hits. Assets such as buildings, apartments, retail basically structures will usually go up in value. Now, there's no guarantee for any of this, but if you do believe in how the company operates and you like what you saw on the slideshow and you want to have a 4% dividend yield while you wait for the company to ramp up into its full strength, I recommend you check out STOR Capital and make a decision for yourself. Remember, I'm not a financial advisor, I'm just a dude who likes the stock. And if you want to see more videos like this on the series of researching stocks together, don't forget to hit that subscribe button so you can subscribe to the channel. Hit that bell for notifications, and don't forget to hit that like button if you like this video and found it useful. Thanks for watching. See you next time.